Hello everyone. Crypto exchange FTX collapse story is rapidly developing into a full-blown crisis. Now that the scope of the debacle becomes more and more clear, and now that we know the names of the biggest losers, we can discuss implications for gold, Bitcoin and crypto, and a possibility of broad market contagion. Let's talk. List of the possible losers from the FTX downfall is growing. It includes major investment firms and public pension funds, like Ontario's Teachers' Pension Plan, the Alaska Permanent Fund Corporation, the Washington State Investment Board and many others. I am curious to hear your opinion about pension plans investing your retirement savings in high-risk projects like crypto infrastructure. Let us know what you think in the comments. A quick recap of the developing story. FTX is one of the world's largest crypto exchanges and a major player in crypto derivative ecosystem. It was controlled by the 30-year-old crypto billionaire, Sam Bankman-Fried. Few facts about him. Graduated from MIT with a degree in physics and mathematics. In 2014, after few short stints at derivative trading firms, organized his own, Alameda Research, specializing in arbitrage between cryptos on different exchanges. In 2019, he founded FTX Exchange, and it grew into the third largest crypto marketplace. Since becoming a billionaire, he got involved in politics and charities, donating heavily to Democratic Party and Biden's campaign. He was a major driving force behind a movement towards regulating of the crypto markets. There is some irony here, given that he probably will be charged with securities fraud among other things. He was called to testify in U.S. Congress on many occasions and was considered a go-to expert on everything crypto in Washington. I think his story is important. Given the size of the failure and his connections, we will see a lot of prominent names dragged into this developing scandal and probably a swift reaction from U.S. and world's regulators on crypto. Now a quick timeline of FTX collapse. Last week, CEO of FTX's competitor, Binance, tweeted that Binance is dumping crypto tokens connected to FTX. News spread fast and FTX clients rushed to move assets out of FTX Exchange. Despite press releases by FTX management, FTX was not able to meet all obligations and stopped payouts. Since Exchange is not a bank, and technically was not supposed to be susceptible to bank runs, rumors started to circulate that there were some misappropriations of client funds. As more information came out, it appears that Bankman-Fried funneled clients' money to his Alameda Research trading firm for speculations on Tether and Lost, causing massive hole on the balance sheet. Last Friday, FTX filed for bankruptcy, possible wiping out all shareholders' equity, and, most importantly, leaving majority of the FTX's clients out of their money. Now we are seeing some numbers and estimates. It appears that total unconfirmed liability of the FTX is around $19 billion. What is known so far is that at least $1 billion of clients' money appears missing, with many more billions in question. Here is article by Reuters. At least $1 billion of customer funds have vanished from collapsed crypto exchange FTX, according to two people familiar with the matter. The exchange's founder, Sam Bankman-Fried, secretly transferred $10 billion of customer funds from FTX to Bankman-Fried's trading company Alameda Research, the people told Reuters. A large portion of that total has since disappeared. One source put the missing amount at about $1.7 billion. The other said the gap was between $1 billion and $2 billion. As we can see, even though the total amount of losses is not clear yet, we are talking about billions. Here is another excerpt, which is very interesting and has important implications. In a subsequent examination, FTX legal and finance teams also learned that Bankman-Fried implemented what two people described as a backdoor in FTX's bookkeeping system. That backdoor allowed Bankman-Fried to execute commands that could alter the company's financial records without alerting other people, including external auditors. This setup meant that the movement of the $10 billion in funds to Alameda did not trigger internal compliance or accounting red flags at FTX. This revelation screams fraud charges to me. Now we can try to answer questions we posted at the beginning of the video about implications for crypto regulations, Bitcoin and crypto market in general, implications for gold and possible reaction of the broad equities. First, let's touch on regulations. At the very least, I expect new crypto regulation framework complete and ready to be deployed within a year or sooner. It really depends on the scope of the losses. The bigger the losses, the sooner US and world's regulators will act. Now, no one knows the outcome. Given the statute of Sam Bankman-Fried as a white knight of crypto, we might see a knee-jerk reaction from regulators. It can be an outright ban, especially if US finds it expedient to get rid of the competition to CBDC. Or it might be a legal framework that will allow long-awaited clarity and might be a positive development for crypto. I am speculating here, but if US regulators decide to allow crypto, most likely, we will see a ban on use of crypto as means of payment. Crypto will be classified and treated as an asset. At a very least, they will have rigid requirements for so-called stable tokens, like Tether, which, by the way, might very well be a next big scam to unravel. At this point, if regulations are in place, corporate investors might be able to navigate this market safely, which would be a positive development for crypto. I am not a financial advisor, this information is just my personal opinion and not a financial advice of any kind. Short term, I expect a domino effect causing a string of crypto-related bankruptcies. It might easily become a Lehman Brothers moment for crypto, with one big difference. There is no Fed to backstop the slide, so it might burn a lot of investors. Just a few days ago, crypto lender BlockFi announced suspension of withdrawals. Hedge fund Galois Capital announced $100 million FTX-related loss. Cryptocurrency Solana lost half of its value due to connections to one of the FTX-sponsored projects, and there will be many more in coming days and weeks. To the Bitcoin. So far, Bitcoin responded with a dive to a new multi-year low in 15,000 range. I think it is safe to say that corporate investors, many of which were burned by the FTX bankruptcy, will stay away from crypto altogether. At least until legal framework is in place. That will remove any support from Bitcoin in the short term, and it will very likely continue it descend into sub-10K levels over next few months. Some thoughts on gold. It might have a positive effect on gold price, given diminished competition from crypto and realization that tangible assets you can take a physical possession of is a wise form of diversification. It might be compounded by sliding US dollar and inflation expectations. All in all, I think it is a positive development for gold and we might see gold move above 1800 mark. Many considered crypto a replacement for gold. I think these investors will see that there is place for both. Now to the broad equity markets. Given the current market instability, at a very least, we might see increase in volatility. Everything will be determined by the scope of losses and a possibility of contagion. So far, we are seeing chain reaction in cryptos only. Cryptos used to be a fringe market, with no influence on stocks. Until now. Markets are weary of possible spillover into the entire financial system. When FTX news broke out, S&P dropped by almost 100 points intraday. Crypto is $1 trillion market now. Many financial institutions have a direct exposure to crypto, but the big unknown is the amount of derivatives. If total market capitalization of crypto shrinks, especially in a disorderly manner, it might affect banks, hedge funds and other major players, triggering a domino effect in a traditional financial system. Just remember 2008, by the time we found out about the size of the derivative market in mortgage-backed securities, most of the financial system was at the brink of collapse. We will see how the situation develops. There are many unknowns and I hope that FTX collapse remains contained to the crypto scene with exchanges clients getting their money back. No one wins when people lose money. Let us know in the comments what you think about this mess and what do you think will happen to the crypto market in the coming weeks. Will US and others ban crypto? Will they get busy with regulating the market? I am curious to hear your opinion. Please subscribe and share if you like this video. Thank you for watching, until next time.